Hello and welcome to Core Finance, where we're joined by Patrick Reid, co-founder at Adamis Principle. How are you today, Patrick?
Hi, Zach. How are you?
I'm okay, getting my tongue tied, but I'm okay. You've got some charts with you or with us for us to look at. And first one's the Fed rate policy expectations. Quite a messy chart there.
Yeah, really messy. And the key story, you blink and you've missed a story. We've got Italy. Yield spreads blowing out. You've got Brexit, obviously. But the key thing that could be a grower is, will they pause in March on the rate path? Now, M&I did a kind of a rumour that kind of repriced next year on the rate path. And this chart clearly shows that we were kind of 3 to 4 hikes in 2019. That's now been quite majorly repriced to 2 hikes. December is still, the growing chorus is a slam dunk. Don't rule it out though, and don't rule out a dovish hike in December as well, with an indication of a potential flexibility or pause. But the thing fueling this rumor before the M&I story came out was JP and Clarida in the last interviews. They weren't dovish, obviously, but they were less hawkish. Every meeting is going to be live now, and this is, it was more their tone, and the markets kind of got them thinking, is this a different tack? The key thing for me on this trade is dollar has not really reflected the curve at the moment, so there could be upside on euro dollar. That said, it's very muddy because euro has got its own problems, as you fully well know.
Well, I mean, the only other point, if you're a cynic like myself, you just say, well, the dot plot here we can believe as long as the stock market doesn't tank. But the fangs are already on the edge. If the stock market gets a bit weak, or there's a retracement in January after any Christmas rally, the Fed won't be doing anything next year.
Well, this is it. I mean, the talk of, is there still a green span put? JP is a bit more pragmatic. He's flexible. He's nimble. Every meeting's live. We pretty much know we've had a 10% in the vol complex blowout in February. That's not enough for them to pause, obviously. But if we get a 15 or 20%er, all bets are off.
Okay, well, let's go on to the next chart and see what we've got there.
So this next chart is basically commodities getting hammered. But have a look at Aussie. It really has taken it on the chin. And for me, I just feel that obviously into the meeting with Trump and Z, I think, if they do crack something, we could get a really big lift on Aussie dollar. That, along with a potential top on the dollar in broad terms, we could be seeing some exhaustion and top. Really structurally anyway, and especially as equities start rolling off, yields do have to remain on the 10-year, do have to remain over 3% for that story just not to play out. But if they do drop below 3%, then you could see a dollar topping, and Aussie dollar I do see it higher if up until this big meeting, but ultimately, rallies will be capped.
Right. I mean, and isn't the Aussie dollar suffering from maybe fears of the housing market? There are other domestic issues rather than the let's say the macro.
Yeah, absolutely. I mean, there's dollar funding shortage. There's risk off, equity-led risk off in a broad sense. Yen's getting bought and Swiss too. But I also think, look, the Aussie housing problem is a problem, but the US has a housing problem, right? So that kind of net is, we'll come to the Aussie chart in a minute on the daily. Net, it's very, very, very muddy.
And do you think do you believe that Trump and Z could come up with a definitive agreement rather than something wishy-washy?
I think it will be window dressing myself. I think it will be enough for some good cheer into the Santa rally for equities, and risk could get lifted, and in all the risk pairs, euro yen, Aussie dollar, but I think it'll be short-lived.
Okay, well, let's go on to the next chart, which is not a pretty picture.
No, I mean, obviously, commodities has a somewhat positive correlation with the S&P, and this is not, obviously, if you look at WTI and oil, and iron ore is a big thing for the Aussie, and just general kind of risk sentiment. I just feel that this is not a pretty picture, and it's not the highest priority on my radar, but it's just a nice to have, and it's just not looking great.
And do you regard this, for people who don't look at this that much, you regard this as a leading indicator, a lagging one, or just on the money?
I think it's on the money, to be fair.
So just reflecting what current sentiment, etc.
Yeah.
Okay, let's go on to the currencies. The Aussie we mentioned, still looking rather sick, probably sicker than cable, actually.
Yeah, I mean, look, Aussie dollar is chopping around the 100-day moving average. That's kind of, to me, reeks of indecision. And you've got, obviously you mentioned the housing problem before. The US, there's a potential pause, and that in itself is a net kind of 50-50 almost. It's looking for direction. And when using my experience, when markets look for direction, they hug around a moving average because it's safe. It's the most traded price around that, and you can see we're dipping above and below the white line, which is the 100-day moving average. But what I will say, usually the week after Thanksgiving, often, not always, but often sets the new narrative of direction for key dollar pairs, and I think next week won't be any different.
Okay, we'll move along. Cable, which I mentioned, well, I suppose it's surprising it's not in free fall given where we are, but it's bumping along the bottom at the moment, let's say.
Absolutely. Now, the key date here is the 15th of December. The cabinet said yes, and it's all well and good, but it's got to go through Parliament. Most of the feeling is nobody's going to be surprised if it doesn't get through Parliament. But that is, after that point, Zach, that's when things get really tasty, because the options, and I lifted this from BBC News, the options are 4, and they're all pretty major shape-defining options for the UK. 1, general election. 2, renegotiate. 3, no deal. 4, second referendum. There's only 1 out of 4 that I'll be buying cable. The rest, it's yours.
Right, and do you think cable's factoring in Prime Minister Corbyn at all?
Not at the moment, but he's certainly. I mean, I wouldn't it be funny if he's having long lunches with Tony Blair? I mean, it's certainly, they are certainly plotting something in a conversational sense. But I know the way things panned out. I know they're not going to be that unhappy about it. And I just think, I have heard, I speak to a lot of macro guys, and the second referendum, if you asked me this 6 months ago, it would have been, laughed upon. But it's there's more and more talk about this. So, and it's not impossible, right?
Well, isn't the amusing thing that everybody proposing a second vote assumes that the second vote would go on the Remain side rather than the Brexit side, which is one of the perhaps ironic way of looking at it. But on that note, Patrick Reid, co-founder at Adamis Principle, thank you very much indeed.
Thank you very much.